Yo guys, it's John here with Option Lab. In this video, I'm going to be talking about the best way I believe to trade a $100,000 account in 2025, leveraging high probability options as well as piggybacking off of the traditional methods that we think of with things like buying and holding the SPY. So if you guys are not familiar with who I am or what I do, I trade high probability options. Option premium selling strategies, that is. I did 2.2 million in 2024. If you guys want to see my account, I can refresh it here for you. So yeah, the focus of this video, I want to kind of talk about what are some alternatives, especially in a down market or potentially down market in 2025, to buying and holding the SPY. How can we use high probability options to supplement monthly return and still implement some of the wisdom of buying and holding long positions? And if you guys are interested in what I'm about to talk about, I do have a free Discord, Option Lab. The first 10 people to DM me print are getting a 1-day free trial to see my trades as well as get my option selling cheat sheet that outlines the strategies I'm about to talk about. So let's get right into this. So how to trade 100K in 2025. So the questions to consider. So first, if 2024 was a strong bull market, can you realistically expect the same percentage return in 2025 by simply holding the SPY? So if you assume just holding the SPY gave you about a 25% return, and the average across a 10-year period is something like 10 to 12%, is it realistic to expect another 25% return year? I think that the answer for me to this question is no. So in that case, how do we navigate a potential bear market or even flat market using a mix of cash secured puts and dollar cost averaging? How do we marry those two strategies to not only get the benefits of the wheel strategy, but also potentially build long-term positions on stocks that are at a discount? And if you guys are not familiar with cash secured puts, that's simply selling to open puts. And as long as the stock stays above your strike price by expiration, you collect a premium. Last question, how do we juice our monthly return with high probability option strategies? So in addition to the wheel and dollar cost averaging, how do we add on strategies for a $100,000 account that might add 500 to 1K a month in extra income, right? Because 500 to 1,000 a month, that's 5 to 10% return across a year, right? Because 1,000 a month would be 1% times 12, that's 12%. So it's a significant amount if you can pull in 500 to 1,000 a month just on things like spreads and condors, which I'm going to talk about. So what is a traditional method? If you read it in any investing book or if you hear a lot of these old timers talk, the traditional method is buying and holding the SPY. So the real question in the whole trading game is, how do you outperform just simply buying and holding the SPY, right? So that's kind of the first question. And second of all, let's talk about some upsides and downsides of this. So the upsides of buying and holding the SPY is across a 10-year period. It's a time-tested method for consistent 10% returns to 12% returns, right? So if you want to sit and do nothing and, sit and suffer through the bad years and enjoy the good years, this is a time-tested method. The downside is that in years with a bear market or a flat market, you're either losing money or making no money, and you're pretty much helpless because your money is literally parked in one position. So if you have 100K in the SPY and the SPY goes down for the entire year, that's just 100K now that you've essentially tied up in a position that's just going straight down. Okay, so what is a potentially better way to trade the SPY or allocate that 100K when the market is either going down or flat? So this is kind of like some of the knowledge that I've applied to my own account. So let's go through this. Okay, so rather than trying to predict and perfectly time your entries to buy the SPY And when I talk about the SPY, I'm talking about the S&P 500. Instead of trying to predict and perfectly time a bottom or a top, what you can do instead is sell 45 DTE cash secured puts on the SPY around a 30 delta. So in that case, if we have the SPY moving as so, this would entail picking an expiration, 45 days till expiration, and selling to open a cash secured put around a 30 delta, which is a 70% probability roughly, and collecting a premium for doing so. So why would we want to do this rather than buy the SPY? So the upside is that it's a decent percentage of return monthly just on the premium you're getting from selling those puts. Plus, you're always entering at a desirable price if that stock were to be assigned to you. So let's think about this. If you were to just look at the SPY and buy it right here, right? You're now a victim to all the downside if it continues to go down. Whereas if you sell a put below where it's already at, far out of the money, if you do get assigned down here, you're owning the SPY at a much better price than you would if you were to just buy it at where it's currently at. The downside of this, however, is that you miss out on the potential upside of owning the SPY, right? Because if you were to just buy it straight out where it's at, if it goes up, you're getting that appreciation in value versus if you were to sell the put and it goes up, you're not riding that upward move. Okay, so hopefully that makes sense. So at a base level, let's say we're allocating 60 to 85K just to this strategy, right? Which is selling cash secured puts on the SPY in addition to possibly owning the SPY and then writing covered calls on it. Okay, so how do we take the rest of that buying power and supplement our monthly return with high probability options? And the answer is adding medium risk cash secured put positions on stocks you don't mind owning long term. So the question I always ask myself is, am I willing to own the stock at this price? And in a down market, you can get stocks that are at a discount that can gain in value over time, not to mention the fact that you can write covered calls on them while you own them, but you're also collecting the premium for writing those puts off the start. So that's number one. So I'm thinking things like AMD, Apple, your textbook names, right? So typically for this, I'm looking at things that are overextended to the downside on longer time frames and have pretty good option premium as well as a little bit of a higher IV. So the next thing to juice this return is going to be adding credit spreads and condors, iron condors, on higher IV stocks where we can go far out of the money and still receive decent premium. So if you're not in my free Discord, I have a ton of scanners that explain, how I actually go about finding these positions. But for the time being, let's focus on, what this actually looks like. So higher IV, if you're not familiar with this, results in higher option premium. And since we're net sellers in the case of a credit spread or a short condor, we want to collect a higher credit, and higher IV environments produce higher credit for the option or for that you're receiving for selling those options. Okay, so in the case of this, we're scanning for higher IV names that we can go far out of the money and still receive decent premium. So these are stocks you might not be willing to own, but are willing to play with a limited risk strategy like a credit spread or a condor. So in the case of a condor, that would look like this: selling a call here, buying a call above, creating a bear call spread, while simultaneously selling to open a put, while also buying a put and creating a bull put spread. And as long as the stock stays in that range, you collect the credit up here plus the credit up there. And in this case, you do not take any massive loss if the stock moves in any one direction. And we can contrast that with a short strangle where you'd be exposed to buying or having shares short. And this can result in an extra $500 to $1,000 a month, which, like I said, if you were to do the math on that, could be an extra 10 to 12% per year on a 100K account not to mention what you are making on these cash secured puts on the SPY. So if you did find this video helpful, I do have a full course in my Discord. Like I said, the first 10 people to DM me print, I'm sending a 1-day free trial to see my trades live every single day. If you guys did enjoy this video, leave a like and subscribe and a comment below if you have any questions, and I'll see you guys in the next one. Peace.